This exact tool is what I use that helped me pay off over $25,000 of debt in 2 years. Cost of life has gone up substantially, and people are just turning to debt to fill holes in their cash flow. It's just so much easier that way. Maybe you've overspent this summer. That's okay. If you want to tackle that debt of yours, then keep watching this quick training on how I use this tool that helped me stay on track with my debt and see roughly when I would be debt free. In fact, I'm going to be giving away this tracker to you for absolutely free. Just comment below debt free and I'm going to hook you up with the link. My name is Michelle Hong. I'm an author of 2 investing books, The Sassy Investor and Investing for Teens, How to Save, Invest, and Grow Money. I am a financial educator and a fee-only financial planner, helping people build their $1 million investment portfolio in the stock market. And in this video, I'm going to be walking you through a debt tracker that I built that helped me stay on track and stay motivated. Also, at the end, I'm going to be leaving you with some very helpful tips as well. So let's head over to my screen right now. So in this debt tracker, there are 4 tabs, and I'm going to be walking you through each of these tabs. It's fairly straightforward. So in the first tab, under what do I own, you're going to be entering the balance of what you have in your checkings account. So your checkings account is the account where you get paid in and where your bills will be coming out from. You want to make sure you have some sort of buffer because this is all about cash flow management. And the last thing you want is to go into overdraft because of the timing of your bills and the timing of when you get paid. In the second tab, you're going to enter in how much you make after taxes each month. So only include recurring predictable income. Bonuses, commission, and all of that stuff do not include because they're unpredictable. Just include what's predictable. It's more conservative this way. In the third tab, you're going to enter in your monthly expenses, including your rent, your mortgage, any property taxes, condo fees, car payments, insurance payments, memberships like gym or Netflix, and then include in this line right here, your free spend, your variable spending. That means it's the monthly amount you're giving yourself to buy groceries, to go out and all that stuff. So that can go here. And then what you're going to do for each of these is you're going to pick from this drop down button box whether it's paid. These bills are paid either the last 2 weeks of the month or the first 2 weeks of the month. And you're going to do that for all of these bills. And then down here under debt, you're going to enter the balances of what you owe, the interest rate for each of the debts. And then the monthly payments, the minimum monthly payments are actually automatically calculated, except for personal loans and student loans. You're going to have to enter that in yourself. But for credit cards and line of credits, these are automatically calculated. And then you're going to select when these are paid, either the first 2 weeks of the month or the last 2 weeks of the month. And then very similar to my guilt-free guaranteed savings budget, down here, you can manage your own cash flow in terms of the free spend, the amount that you entered in here. So down here, it's going to pull that number down here. And then this is the amount you're going to be allowing yourself to spend each week. This is your weekly free spend. You can buy whatever you want. Just don't go over this amount each week. And then that means you're not going to be going over that amount each month. That ensures that you are staying on track, you're not overspending, and you're not going into further debt. So over here is what is available for extra debt payments. Okay, so we're going to go ahead to the next tab where all the numbers are pulled in here. Okay, so each month, these are the monthly numbers. But what the rest of the sheet is, this is a bi-weekly spend plan. Okay, so I would get paid twice a month. Some people get paid every 2 weeks kind of thing. So this works with that. And what's going to happen is each column represents, the first 2 weeks or the last 2 weeks of the month. What's going to happen is it's going to pull down all your living expenses, and then kind of divide it into the column that it belongs in, whether the bill is paid the last 2 weeks of the month or the first 2 weeks of the month. So all of that is pulled in. And when we go down here, where you're going to start entering your additional debt payments, you're going to see the credit card, the balances. Okay, it's going to keep getting updated throughout the spreadsheet over time. And you're going to see these balances, they're in red. And then over here, you're going to see the money remaining after expenses and minimum payments from each paycheck. Okay, so you're trying to allocate your money optimally, efficiently, and making sure every dollar goes somewhere, and that it's not just being spent aimlessly or just sitting there doing nothing. So especially if you have debt, you want to make sure you're tackling those balances. So basically, what's happening is in this column for this time period, this time frame, I have $1,892 left. And so what's the pink boxes are the payments, are the debts that I have. So I have one credit card in this case and one line of credit. So what I want to do is I want to tackle my credit card debt first because the interest rate is higher. And so for this paycheck, after factoring in the minimum payments already and all of my expenses for the month, including my variable expenses, I have $1,892 left from this paycheck. So I'm just going to enter that amount right here. And as you can see, the balance will go down. And right here, this amount, this line right here, money remaining from paycheck after extra debt payments. So it just goes line by line to show you what is left and making sure that every dollar is being allocated. And down here is the amount remaining in your checking account. Now, remember in the very first tab, I asked you to enter in the balance that you have in your checking account, okay? This is for the purposes of making sure you don't go into overdraft, so you have a buffer. So for the next period, the next 2 weeks, I have $33 left, right? And it tells me this in the money remaining after expenses and minimum debt payments from each check, right? So not a whole lot because, well, this is the first 2 weeks of the month and my rent, for example, comes out of there. So after accounting for rent, it's not a lot of money that's left over. That's okay. I have $33 left. I'm just going to enter that in. And then I'm going to keep doing that. So this is the amount that I'm going to be looking at this amount and entering it down here. But this is also a check, right? So let's just say you only enter in, $700. What's going to happen is, well, it's telling me I have $1,192 left from this paycheck to be allocated, which means if I don't do anything with it, my checking account will have this balance. So depending on the payments that you have, like how many debts you have, maybe you're splitting it between 2 payments for the month or just one. Okay, it's entirely up to you how you want to pay your debts. You can split them up. Let's just say, as an example, you can do that, making sure each check is fully allocated to the debts that you want to be paying down. In this case, because it's one credit card, and one line of credit, and the line of credit holds a lower interest rate, I'm not going to pay that. I'm going to allocate everything towards this credit card. So I'm just going to keep doing that. Okay, so another thing to keep an eye on, okay, that's okay if I enter, like if I'm just like mindlessly doing something, it's going to tell me an error. Okay, so I'm going to cancel, which means that my balance right here is almost done. So I only have to pay off $73 for this credit card, which is wonderful. And once that's done, it turns black, which means there's no more payments to be made for this credit card. So now for this period, I can now go ahead and start tackling my next debt payment. And I'm going to do the same thing throughout until this goes to until this goes to zero. So as you can see, by this time period, for example, let's just say it's May 31st of next year, my credit card debt will be done. And I'm going to have around $9,213 left on my line of credit. So this is what helped me stay insanely motivated, because it's nice to see that, okay, well, I have some credit card debt. It's a big balance. When am I going to be free of this? Well, according to this, if I stay on track with this, then, by February, I would have been able to pay off my credit card. So remember I said, do not include non-recurring income like bonuses, sales commission that differs every month, or even tax refunds. There is a line right here under non-recurring income. Okay, so this peachy line allows you to fill out any sort of lump sum payments you get, maybe your bonuses or a tax refund. You can put that in here. So for example, let's just say in April, I'm expecting a tax refund of say $6,000, right? So I'm gonna put that in here. And as you can see down here, I'm gonna have an extra $6,000 in my account, and I want to, allocate that amount fully. So what's going to happen is now I can update this, as I'm going, and then continue doing what I was doing before, and just watching my debt balance go down, and just there, and just, staying on track until everything is pretty much paid off. Okay, so I just want to make sure that in this case, I'm looking at my balance and I see that there's $1140 left. And then once that is done, you're going to see that, hey, your savings is going to start accumulating over time, because you're no longer allocating money towards all those debt payments. Now you have money available for other things, whether it's building up your savings, if you want to beef that up a little bit, or your investments. This is a tracker that was super helpful because, again, it allows me to see when roughly I will be debt free based on my current recurring income. And then, of course, if there are any anticipated other income that comes in, I can fill that in here and use that income to make additional payments towards my debts. And it's nice to see that it's zero all over here. It's black, which means there's no more payments left to be made. If you want to make changes to this purple button allows you to clear everything and start again. It doesn't clear this, so you're gonna have to delete that. So that was a tracker that I used that helped me stay motivated, stay on track. I kept an eye on all my expenses and how much I was allocating towards my expenses and debt. Other tips that I want to leave you with is focus on increasing your income, okay? But make sure that you have cash flow coming in, okay? Debt is not really particularly the most stressful thing. Having no cash come in is even more stressful. So when I graduated in university at the peak of 2008 recession, okay, I had no job for 6 months, no cash flow. Okay, so that was super stressful for me. Eventually, I got a full-time minimum wage job, and believe me, I was so grateful. Okay, I knew it wasn't permanent, but in the meantime, I had cash flow coming in. I was applying for other jobs until I was able to land the job that I wanted. And of course, it paid a lot more. On top of that, set aside money to invest in yourself, okay? You need to feel good mentally and physically. So what I did was I invested in a fitness pass to help me feel good physically, mentally, which allowed me to focus and study for my professional designation. Again, that would lead to higher income. Another thing to do is set aside money for savings in case you need to dip into it and not go back into debt. So there's this thing about, should I save or pay off debt? Again, nothing is ever mutually exclusive. You can do both. For one of my clients, while she was paying off her debt aggressively, she was also setting money aside in her savings account for an emergency. So that came in handy when her dog got sick. She had to cough up quite a bit of money, but she didn't even hesitate or worry about paying that expense. She didn't have to put it on her line of credit or anything because she already had the cash in her savings account to pay for it. And lastly, if you do fall off the tracks for 1 month, that's okay. Just don't do it again. If you can, what you can do is double the payments for the following month. Okay, either work extra hours, sell some stuff, get a side hustle if you need to. This way you make up for the previous month you didn't get to save anything or make those additional debt payments. Even if you don't make up for it entirely, pay off 10% more, 20% more of your debt than previous months. It's better than nothing. So there you have it. This is how I was able to pay off for $25,000 of debt. The same strategy that I teach my clients and my students has also helped them get out of debt. So if you want this tracker, comment below, debt free, and I'm going to hook you up with the link.